Tesla is in trouble. At one point, its stock was down 75% from all-time highs. And with EV competition heating up, plus a looming recession, things aren't looking so great for Elon Musk and his Tesla empire. And that's got me wondering, can they recover from this massive slump? Or will Elon go bankrupt because of this? Let's find out. In order to talk about Tesla's future, it's important to know how they even got here in the first place. So let's start with their recent supply chain issues. Tesla has struggled to meet delivery deadlines for a myriad of reasons, but two of the biggest ones would be chips and Corona. I'm not talking about the chips and beer that you consume while watching football. I'm talking about the semiconductors that control every aspect of Tesla cars and the global pandemic that started in 2020. These two factors have kneecapped Tesla's ability to produce vehicles across its American, Chinese, and European factories. It got so bad that Elon Musk called his Berlin and Austin factories money furnaces due to the amount of money they were losing on a daily basis. Both factories were missing their delivery targets of 5,000 vehicles per week. They were only able to get out around 2,000 vehicles instead, largely due to supply chain issues in China. And anyone who understands business knows that not having enough inventory is a catastrophic problem for a company. Furthermore, the shortage of chips from Tesla's main suppliers has led to high costs as they've had to buy chips from other sources at higher prices. If that wasn't bad enough, the pandemic has also devastated Tesla's ability to keep its factories open. In December of 2020, Tesla was forced to suspend work at one of its major factories in Shanghai due to COVID infections on the rise. All these factors combined have caused Tesla to adjust its production schedule multiple times, and that trend doesn't seem to be changing anytime soon. But how does this affect Tesla stock and your portfolio? Well, for starters, Tesla has lost almost $1 trillion in market cap since its peak in November of 2021. They've also performed the past 2 quarters, missing most Wall Street targets. Now you might be thinking, just because Tesla has been performing poorly doesn't mean it'll stay that way forever. And you're absolutely right, but this video is focused on the bear case for Tesla. So buckle up because we've got more bad news to cover. Now real quick before we continue, I recently launched an affiliate deals page on my website where you can find a bunch of deals and discounts. I'll leave a link below if you're interested. Okay, so Tesla was and still is the premier electric vehicle company in the world, but its competitors are quickly closing the gap. GM has a Chevy Bolt EV, Ford is heavily investing in its electric vehicles, and BYD Auto has overtaken Tesla as the world's largest seller of electric vehicles. And that's just the well-known companies too. Newer, smaller companies such as Rivian, Lucid, VinFast, and Fisker are all jostling for market share as well. So there's an electric car version of Game of Thrones going on, and winter is coming in the form of a looming global recession. More on that in a bit. So we have competition heating up, and to make matters worse, Tesla hasn't been able to deliver on some of its biggest promises, like building a fully functioning self-driving car, for example. For years now, we've heard promises about Tesla's full self-driving capability, or FSD for short. Elon Musk promised a beta version for this feature by 2020, but it was pushed all the way back to November of 2022. Currently, FSD has been on the road for a little more than 4 months now, and so far, the reviews don't look good. There have been early reports that it's not worth the money, and that FSD has a long way to go before it's fully functional. And that feature has already caused some high-profile accidents too.
An 8-car crash on the Bay Bridge last month is blaming the full self-driving feature of his Tesla. The Tesla driver told the CHP his car was in full self-driving mode when it braked unexpectedly.
These issues have led to regulators around the world to increase their scrutiny on Tesla, and that makes the short to mid-term outlook for FSD a bleak one. But besides FSD, another one of Elon's swings and misses is the Cybertruck. How can we forget about that truck and its bulletproof windows?
It didn't go through, so that's a plus side.
The Cybertruck has been delayed multiple times since its announcement in 2019. It's been pushed back from its original 2021 launch date to now the middle of 2023. But with Tesla's histories of delays, I wouldn't hold my breath for that to happen either. All these setbacks and squandered promises are really making it easy for Tesla's competitors to catch up. Now, there's another massive hurdle for Tesla, and it's that their revenue from EV credits are declining. If you don't know, regulatory credits, or emission credits, are certificates or permits that let companies offset their own carbon emissions. These credits can be bought and sold between different companies and can be used to comply with emissions regulations. Tesla has been selling a ton of their credits for pretty much pure profit over the past few years. However, their revenue from these credits can be extremely volatile, and they just lost one of their biggest customers in this area. From 2019 to 2021, Fiat Chrysler spent $2.4 billion buying carbon credits from Tesla. But after merging with PSA Group, Chrysler is leveraging that company's EV products, hence eliminating the need to buy more carbon credits. Also, with mainstream automakers doubling down on their own EV programs, Tesla's gonna have a hard time to find buyers of their credits. It's also worth noting that China is ending its decade-long subsidy for electric vehicles this year. So that means EV automakers, including Tesla, will have to offer deeper discounts to maintain sales as demand for EVs in the world's largest market starts to drop. So let's recap. Tesla has shipping delays, tough competition, decreasing demand for credits, and harsher regulatory scrutiny. So things can't possibly get any worse for them. One word?
Recession. Recession.
Car companies are expensive to run, and Elon himself has said that a recession could last all the way until 2024. So if there is a recession, Tesla will most likely face slower growth like other companies. Tesla cars are in high demand right now, but consumers could become skittish about making bigger purchases if a recession comes. Tesla has never been through a major recession, by the way, so it's unclear how the company will fare overall. But perhaps with their AI tech, data advantage, and network of superchargers, Tesla could weather the storm better than other EV companies. So that could be a bright spot for Tesla. That is, if Elon can stay focused on the company. For months, Elon Musk has been covered by every news outlet imaginable for his purchase of Twitter and subsequent shenanigans. To make matters worse, Elon has officially lost more money than anyone else in history. He lost around $200 billion in personal net worth. To put things in perspective, that's more than the total yearly GDP of 96 countries combined. Musk also sold $22 billion worth of Tesla shares in 2021 and roughly $15 billion in 2022 to help finance his purchase of Twitter. But that has raised concerns from his investors that Elon's distracted and no longer focused on Tesla. One long-term investor, Trevor Goodwin, even went as far as saying, quote, "It's almost like he abandoned us in favor of his new mission." Ross Gerber, one of Tesla's largest investors, also tweeted, quote, "Tesla's stock price now reflects the value of having no CEO." That's pretty harsh any way you slice it. But where does this bear case for Tesla leave us now? Well, this is not financial advice, but I'd personally avoid buying Tesla for now. It's unlikely that Tesla or Elon will go bankrupt, but Tesla is definitely facing a reality check as things become more volatile for the automaker. However, I do think that Tesla is better positioned than other EV companies to rebound, and CFRA research analyst Garrett Nelson agrees, keeping Tesla at the top of his automakers list despite all the recent issues. And there you have it, my strongest bear case against Tesla. Let me know how you feel about the outlook of Tesla and its stock price, and don't forget to check out my brand new affiliates page linked below.